Hello everybody, good afternoon and welcome to this ICAEW webinar, a digital future for corporation tax in association with tax systems. My name is David Lyford-Smith. I'm a technical manager in the tech faculty here at ICAEW, and it's my pleasure to be your facilitator for this afternoon's session. So tax is really going digital around the world. HMRC's Making Tax Digital program in the UK and many other equivalents in other countries showing us really the increasing importance of digital administration in tax and in the future how tax is going to work. And of course, tax advisors, accountants, tax departments in companies all have very important parts to play in making that all work and delivering the kind of benefits of that digital transformation without having to run into unnecessary costs and difficulties. And that's why we've got our speakers here today to talk to you about these important trends and how we can, as accountants, can get involved. Just before I hand over, we do very much encourage you to get involved with today's webinar. You can submit questions to us at any time by typing a question into the Q&A box, and we have allowed time at the end of the presentation for Q&A, so please do keep those questions coming in. In the chat box, we will also post a download link. This will allow you to access a copy of the slides for today and some other resources which are relevant to the webinar. So if you're interested in those, then just check out the chat box at the top of the chat thread. You should see that. If you have any kind of technical issues, so loss of audio or anything like that, please do try refreshing the call initially, so dialing out, dialing in, and that should solve the problem. If you do have continued technical issues or any other kind of technical problems, then please do use the question box to let us know about those difficulties, and we'll do our best to help. So I want to introduce today's speaker, which is Russell Gammon. So Russell is the Chief Innovation Officer at Tax Systems. He's responsible for the innovation team within the business. He's tasked with moving all products to a single digital compliance platform with a cloud-first mentality. And he's particularly interested in tax automation and calculation and balancing best practice with a practical approach. So Russell has significant tax expertise, previously worked at Deloitte and KPMG, where he launched the K-Helix product and grew it to become the highest grossing tax solution in the UK firm. Went on to specialize in the development of tax compliance software before joining Tax Systems in 2020. And outside of that, he's a keen cook and would like to run the London Marathon. So now, Russell, over to you for your presentation. Thank you very much.
Thank you very much. I will just I'm doing the marathon in October, David. We'll see how that goes if we get there, and presuming it now happens. I will share my screen. I will also no, that's not the right one. If there is, that should be the right screen. I'm sure somebody will shout at me if it's not.
All good.
Yeah. So I will also apologise before we kick off. To say that my neighbours are having a loft conversion. If it sounds like someone's drilling through the wall next to me, it's probably because they are drilling through the wall next to me. So I'll start there. But yeah, thank you very much for the introduction, David. As he says, I'm the Chief Innovation Officer at Tax Systems, so really responsible for driving our agenda in terms of cloud adoption and technology and processes. And I'll talk quite a lot about that today. So in terms of then the agenda, so there's quite a lot to run through that I'll go through today. I'll touch on kind of where we are and why I think a kind of a revolution in tax technology is kind of a matter of when and not if, and what's driving that. What are the drivers for change, and looking specifically at tax and tax teams, and ask David for some of his input into that. And then talking a little bit around kind of what the future looks like. What do we think here at Tax Systems that the future kind of looks like for tax technology? So where are we today? Looking kind of outwards, starting to just kind of set the scene really, and I'll spend a bit of time setting the scene at kind of a macro level, talking about global trends in finance and trends in tax, really kind of thinking from the top of the funnel, what's going on, and then filtering through to what we're seeing in finance functions and then tax functions specifically. So if we think about it from a global point of view, I mean, this is the most boring slide, I would hope, of the entire presentation. Ultimately, cloud is growing. Cloud is growing at an astronomical rate. If you look at the adoption of people like AWS, you can see the graph there on the left. And if you look at software as a service revenue in the UK, you will see that revenue has grown massively over the last. Oh, David, you're about to say something.
Yeah, that's all right. I was just saying, I think you've currently got the back end shared, the slide for the presenter view rather than the slide. So we could probably make the slides a little bigger for people sharing the other screen. So just noted that.
Okay, I will change that. That is always good to know. Wouldn't be doing a technology webinar if you couldn't get the technology right. Okay, good. So thank you. It's it's good to know that we have tech issues on every level. So just setting the scene really. Cloud is kind of taking over. The stat that I thought was actually most interesting when doing a bit of research for this was that according to Cisco, they think that 94% of workloads in 2021 are going to be processed via the cloud, and that's quite a massive stat if you think about it. So ultimately, cloud is growing. I won't labour that point any further. The thing I think was really interesting for me was that people are putting a lot more trust in technology than they used to be. And again, some of these things might feel quite obvious. I thought that was an interesting one where if we look at the search engines, they started to come around in the early 2000s, people were searching for cheap a lot of the time. Now they're kind of searching for best. There was a lot of technology trust out there. One of the other stats that I didn't put on the page, much to my dislike, but marketing's like, was that the fact that 45% of relationships now in the US are actually born from online dating apps. People are trusting online a hell of a lot more than they used to be. And that therefore kind of trickles all the way through from, every aspect of our life, but through to work and how we kind of do our jobs. I think also COVID materially has shifted. And again, it wouldn't be a slide deck on technology without something to do with COVID. If you look at the, this massive spike there in retail in terms of grocery delivery, we saw just as the start of the pandemic hit, and that trend hasn't really reversed. That trend remains, I believe, still around about 10% today from pretty much 5% before. And I think everyone knows Microsoft Teams these days, but if you look at the stats there in terms of just how quickly Teams grew from 500 million minutes to over 2.5 billion in just a matter of weeks as COVID hit. So there's a lot of changes that have been coming in through COVID, and I think they're here to stay. Moving forward then into kind of finance and what we're seeing in finance, there's some quite busy graphs here that I've pulled out of a PwC report. But I think really, realistically speaking, what we're seeing a lot of is that people in finance functions are far more likely to be at the forefront of technology compared to where they were a few years ago. So if you look at the top graph here, you'll see that spreadsheets are always going to be number one in finance functions. But if you look at analytics and data visualizations, for example, then those skill sets are massively coming to the fore a lot more than they used to be. And if you look at the role of the auditor, nearly 90% of respondents, when asked around if the digital skills are fundamental to the role of the auditor, said yes. So we're really seeing a push forward in terms of adoption of technology throughout the finance function. And I think the point that PwC made really well was that we're seeing kind of this traditional, on the left-hand side, we see this traditional finance pyramid where people spend, the majority of their time, number of hours, number of days spent in, processing transactions, and that then filters up to reporting and insight and action. And actually, if you take a look at some of the top performing kind of technology businesses and top performing companies globally, they're absolutely flipping the pyramid. They're using technology to automate a lot of the transactional stuff and the compliance and reporting. They're spending now more than half of their time on insight. So I think that's a really interesting stat. If you then think about, where we are in tax at the moment, a lot of tax functions look, again, a lot like the kind of traditional pyramid, but we're starting to see a flipping of the pyramid as well. And then if we take a look at tax specifically, and these were a couple of stats I've pulled out of a few different reports from the likes of McKinsey and others, is that tax is kind of quite high up on the hit list of what can be automated. So according to McKinsey, they estimate that between 30 and 40% of most finance functions can be automated, and then that's kind of a 30 to 40% time reduction in that. So you'll see the tax is quite high up in this metric. And the other one I thought was quite interesting was that according to the same sort of study, that 38% of tax kind of finance function automation within tax, 38% could be fully automated, and further 19 was highly automated. So looking at their estimations and their statistics, you're looking at a finance function that's quite highly automatable. And within that, tax being in kind of a key stream for the target of automation, something where you can get material benefit. And we're starting to see that a lot more when people look at traditional tax tasks that maybe take 2 or 3 days, and they can drill out 80-90% tasks time in those particular processes. So there's a lot going on in those, which I think is quite an interesting stat. And then really, where are we in tax technology? I think generally speaking, and this is a sweeping assumption across, from my part, across the market, but when we think about corporation tax, pretty much everyone in the UK uses corporation tax technology. But then when we look at VAT, it started to move kind of up this technology adoption curve. So this is a technology adoption life cycle. It's a pretty standard way that technology tends to be adopted. over this time. And VAT still hasn't kind of crossed. There's a whole book called Crossing the Chasm, which is a quite famous book around technology and marketing. But VAT hasn't really gone there yet. It certainly has. We've seen quite a lot of adoption this year because of MTD and VAT, but certainly it's not necessarily gone mainstream. A lot of people are still using Excel. And then if you think of something like AI, artificial intelligence and tax, it's not being used that heavily. It's a real kind of early stage. So tax technology generally is, I would say, behind the curve. And what does that mean? Why have I said all of these things that might seem a little bit disjointed? Well, it's my view that cloud is really kind of pushing forward, and there are kind of macro factors outside of tax and indeed outside of finance that are driving the adoption of kind of technology. And then if you look at finance, and if you look at the opportunity there, tax is definitely an area where there is a big opportunity for improvements and automation. And then within tax specifically, there is again an opportunity to say, well, the tax is kind of lagging the finance function, and it could therefore catch up. And therefore, it would be my view and my conjecture that, the tax technology revolution, it's a matter of when that happens and not if. And we are seeing much greater adoption over the last 12 to 24 months, and certainly before that for sure. So that's just hopefully setting the scene a little bit. In terms of the drivers for change, I actually wanted to hand over to David to kind of give a bit of insight from some of the work he's been doing over at the ICAEW. So David, over to you, and I'll do the Chris Whitty flicking of the slides for you as I may require.
Yeah, so I just wanted to talk a little bit actually about some research that we've done in the tech faculty previously, in which I'm currently working on updating at the moment. So this was a paper that we originally did in 2016, which is called Digitalisation of Tax, International Perspectives. So to give you a bit of background, 2016 would have been about when the Making Tax Digital HMRC consultations were in the deepest, and those plans were coming forward. And so we wanted to get an understanding of how Making Tax Digital compared to other countries, what they were doing with their digital tax administration, maybe where we could learn some lessons on where things were going well, some things which were perhaps more difficult. And so what we did was identified 7 countries. We did case studies on each of them to kind of compare and contrast, the UK plus 6 more. And that was a really helpful exercise for us. We published that report in 2016, 2017 as a kind of piece of thought leadership. And we then updated it in 2018, 2019 to expand to 5 additional case study countries, so up to a total of 12, and kind of review how things have changed. And I'm currently in the process of doing the research and interviews for a 3rd edition, 2021 edition, which is going to be looking at a few other things. So this is something that we use to talk when we're talking about with policymakers in government and elsewhere, when we talk to senior finance professionals and accountants in key tax positions, to kind of give them the context and our understanding and our research about what's going on in tax digitalization in different countries. Next slide, if you would, please, Russell. So just briefly want to talk about the case study countries to give you an example of the kind of variety. So the original 7 we looked at were Australia, Brazil, the Czech Republic, Estonia, Italy, Russia, and the UK. In the 2nd edition, we added the US and Canada, China, Nigeria, and Singapore. Singapore too small, unfortunately, to see on this particular map. And if you will go to the next slide, please, Russell. I'll talk to you a bit about some of the lessons and themes that we identified from the first 2 editions of the paper. If you'd like to read it, by the way, icaew.com/digital tax. It's freely available there. So firstly, pre-population. So this was particularly clear in countries like Estonia, where they have a very interconnected digital government platform with a lot of features in place that prevent you from having to fill out anything twice. If you've already provided a number or information somewhere in the system, it's then remembered and populated everywhere else. And that's particularly true for the tax returns, where it's very heavily automated for individuals, and most of it's done centrally. So that's something that's a real advantage for making tax easier for taxpayers, but also avoiding mistakes and increasing efficiency of tax collection for the authority. And that, of course, is driven massively by third-party relationships, by gathering information from employers and banks and other kind of important parties who might have information that's relevant to the tax return. But it's also important to make that work, that they are working closely with software providers that are helping people file digitally. We also saw the importance of simplification of tax systems. The countries that were most successful at automating and digitalizing their tax were often those that had simpler tax systems, so particularly some of the post-Soviet countries that were, perhaps reinventing their tax system from scratch, or who were just starting digitalization almost from the ground up, rather than having to build on top of old legacy systems that were creaking and had to be accommodated. We also saw a lot of concern around digital exclusion, about companies, individuals being unable to work in a digital space and handle digital tax administration because they were either geographically or otherwise cut off from the internet, or they didn't have that expertise. We saw the importance of the need for legal support and proper legal frameworks to be in place in order to request information. And we also saw a huge variety of different approaches. So next slide, please, Russell, just to take us to the end of this. I just want to talk about the 2021 edition that I'm currently researching. So we're looking to expand our case study to Japan, Kenya, and New Zealand. So continuing to look at countries of all sizes and locations with different kinds of interesting stories. So in Kenya, for example, loads and loads of digital money through the M-Pesa system. So lots of digital payments taking the place of what would have traditionally been a very cash-based economy, and talking about the impacts of that. We're also looking at some new key trends. Of course, COVID has to be one of those, talking about the response to the pandemic and how that has affected tax administration. We're looking at the need for high quality and robust and secure digital identity. And we're also looking at international cooperation and collaboration. One of the things that I've read for that research that I think is particularly interesting is from the OECD Forum on Tax Administration, which brings together the sort of tax authorities from all the different OECD countries for these kind of combined projects. And they released a paper called Tax Administration 3.0, which is really interesting, looking at perhaps where, if you think of tax administration 1.0 being the paper-based traditional one, 2.0 being the kind of digital online version of what we're doing now, they're starting to think about what will the future look like. And that includes, I think, concepts such as tax forming a part of natural systems. That is, tax built into accounting systems, built into payroll, happening automatically in the same place that the taxable transactions are happening, and being just a natural part of that process rather than something that's bolted on at the end. And there's some really interesting case studies and articles written in that paper by some of the tax administrations in the OECD. So I do recommend that if you're interested in the space. And as I mentioned, you can read the current report, icaew.com/digital-tax. And that's also where the new edition will be when it's released later this year. So a little bit of background from me.
Cool. Thank you very much, David. Really insightful stuff, I'm sure. A lot of us will be reading that report, myself included, when that comes out later in the year. So but kind of then back to kind of the here and now, and in terms of what we're seeing. Again, it won't surprise any of you, but HMRC have got a little bit of a gap that they need to make up after the last 18 months or so in terms of spending versus revenues. And I think the interesting thing being is that the only tax take that actually has gone up over the course of the pandemic is tobacco. Absolutely everything else has gone down, and things like VAT and corporation tax, a material amount they've dropped from their pre-COVID levels. So HMRC have not only got a lot more spending that's happened, but they've also got a big gap that they need to fill. In terms of then why are we seeing kind of what we're seeing from HMRC? And I think this is the kind of key stat that I pulled out from their annual report. If you look at this is all around the tax gap. So we've got a variety of different areas in terms of the small and the large businesses, different types of businesses and individuals. But if you look at the taxes, it's pretty clear why they've gone with the strategy they've gone. They've started with VAT. It's the biggest business tax, and of course it's also the simplest tax. I remember all the way back at the start of MTD discussions, as David was saying, in sort of 2015 and 16, they're actually considering putting corporation tax first. But A, it's more complicated, and B, it doesn't bring in nearly as much of kind of a tax gap difference as VAT does. So that obviously makes sense when you're looking at a business to tackle VAT first, which is why MTD for VAT was the first one first cab off the rank, if you like. If you look at by behaviour, if you look, the top kind of behaviour, and this is a misnomer pretty much from everyone I speak to, particularly outside of the tax profession, that they presume that the tax gap is all about criminals not paying tax and kind of dodging tax, or paying builders cash in hand and all that kind of stuff. And whilst these things absolutely do go on, the failure to take reasonable care covers some more basic things, not doing copy paste incorrectly or missing a zero on a number and all those sorts of things. So this is really kind of the driver behind why VAT has gone first and why digital links is such a big area, because ultimately it targets these two kind of big buckets of tax gap. So that's kind of where we are. So we've got a big gap to go after, and we've also got those kind of behaviours to tackle. If you now look at their 10-year digital strategy, so in July last year, HMRC put out their digital strategy, and indeed they followed it up with a lot of consultation papers that landed on tax day. There were quite a few of them. So there are lots and lots of agendas that are coming out from HMRC, some of them small, some of them bigger, and we'll talk a bit more about, for example, MTD for corporation tax. I'll cover some of the specifics of that in a little while. But you can see that we've got some stats directly from HMRC. For example, you won't have a full MTD experience if you're using spreadsheets. This was something, again, I pulled out of the HMRC annual report. This is their kind of using some of their methodologies of how much of additional revenue they're collecting by using kind of technology and using the processes behind that. And you'll see that over the period of time where we're steadily getting an increase from HMRC. I can send a link afterwards to exactly where this is in the annual report, but I thought it was quite insightful. They are continuing to push for additional revenues, and that's, again, isn't going to change. If we then flip forward to a little bit of research that we did and start looking a little bit inwards in terms of into the tax functions, rather than looking at kind of what HMRC are pushing at. We did a survey last year to our corporation tax clients, and this was kind of the findings. These were some of the findings that came out of that. What are the kind of drivers, or what are the things that are really challenging those tax teams? And increased obligations, continues to be a theme, and we've seen that theme for a long time. That over the last few years, we've seen the introduction of things like FATCA and BEPS and country by country, and obviously MTD for VAT and other kind of such things coming along the line. So the number of obligations increasing continues to be the kind of main driver, but also the ability to kind of, wanting to have a bit more transparency and the increased role of profile of tax, which we'll talk about in a second. So there certainly is a kind of some common themes that are driving people internally. We actually got some of these quotes, and there's quite a few of them here. So I'll also send in the slides out afterwards, so you'll be able to take these slides and kind of digest them at your own leisure as well. But certainly we're seeing tax becoming more important. We're seeing the phrase that tends to get used is kind of tax in the boardroom, and I think we are seeing that a lot more. We're seeing people wanting to engage, wanting to bring tax in to finance more, rather than leaving it kind of as a siloed function. And I think that, again, is testament to the fact that HMRC are upping their game. They are striving to reduce that tax gap, and they're striving for a better a better tax administration. They've got that 10-year view, and they continue to push out on that. So we're seeing kind of the external factors driving us. We're seeing the internal factors driving us. I think the other thing as well that's probably come out a lot more since the start of COVID for us is that we're seeing a big change in operating models in tax. I think if you wind the clock back even 3 or 4 years, you pretty much had a model of insource or outsource. You either insourced your tax and did pretty much all of it in-house, or you outsourced your tax and gave it all over to an advisor, be it one of the big four or a smaller advisor, depending on kind of your size and appetite to spend. And that's still the case with the vast majority of businesses, but we are starting to see this kind of emerging world of what we're kind of calling co-sourcing. And what we mean by that is that ultimately, technology is starting to enable people to kind of share the workload a little bit more. So for example, if you think about the corporation tax process, rather than simply saying, to your advisor, right, you can do absolutely everything, we'll just give you some data and at the end you'll give us your returns. We're now seeing more of a kind of a model that says, well, actually we're going to pull the data out of our system, and we're going to process it, and we're going to produce a first draft, and then we want our advisor to review that. And there are all sorts of different hybrid models that we're starting to see that are kind of being enabled by technology, and I see that trend continuing. So it'll be interesting to see how that kind of plays out, but certainly it's no longer this kind of binary in-source versus outsource, and I think that's important to know. So summing those things up, we've got kind of, if you're in this internal kind of tax function picture, we've got kind of the global digitalization that David's talked about, that journey continues, and that agenda absolutely continues. And when we take a local view of that and look at HMRC's viewpoint, HMRC are kind of focused on the tax gap, and they will continue to be so. We've also got that kind of internal changes within tax for all sorts of good reasons, and I'll talk a little bit more about MTD for CT in a second. But I think all those things are kind of driving where we're going. In terms of the next one, we're actually going to ask a poll question now. So we're going to pop a poll question up on your screens and then see what you're saying. So hopefully a poll question will appear. And so this is So, you know, the digital strategy is now up and running. MTD for VAT is kind of now, you know, we're already there. The first digitally linked returns have to be in over the next month or two. So everyone's kind of in that now. And of course, we've been doing the API submissions now for best part of 18 months. So I guess where are you? What are you doing? Do you already have a plan in place? And you're basically, you know, you're pretty happy with your tax processes are already digitized. Do you intend to do to kind of use MTD for VAT mandate? We're seeing a few people do this. They're kind of starting a wider digitalization piece by using MTD for VAT as that kind of launch pad. So that's kind of option 3. And then are you kind of waiting, kind of a little bit of wait and see, or in fact, are you quite happy and you're not intending to do any digitalization? So once we've got a few answers, I'm sure we'll close the poll, but go ahead and answer now.
Just while we are getting those answers, I also want to remind people, if you've already answered the poll, you don't forget that you have also got access to the Q&A. So you can open that from the bottom bar. There's a Q&A section there. And if you've got any questions for Russell, then do send those in.
Yeah, okay. So there's some good responses there. Majority of people kind of waiting, or the biggest slice of people, about a third of people waiting for MTD to bed down, which I think is, you know, it's a sensible strategy. There's a lot of change going on and people are investing in new systems and therefore maybe not wanting to bite off too much. So that seems like a sensible strategy. Good to see that only 5% of people are not intending to digitize and are going to soldier on with that kind of Excel world. So hopefully a lot of people there kind of driving into those top 2 or 3 answers to say, you know, we know we need to get there. We've got a lot of time, but I do think that probably chimes with what we're seeing in the market. So that is a good poll. Thank you very much. So the next section, really, I was going to jump into MTD for corporation tax because I think it's an area that is a big area for us as a business. We are, you know, we do lots of things, but corporation tax is our main product, and we've been doing that for nearly 30 years. Our alpha tax product is pretty well known in the UK. So we've been doing that for a long time. So just to recap kind of what it is and where we're going, and hopefully also provide a couple of new bits of insight into it as well. Just some of the thinking we've been doing internally, but a lot of people haven't necessarily delved into the detail too much yet. So I'll do a bit of a recap. So kind of where are we? HMRC launched their consultation last year in December, and that came out and the responses were due and submitted by the 5th of March. And I think we saw quite a variety of submissions. So a lot of the industry bodies, ICAEW being one of them, and I'm sure many others, doing kind of submitting responses to that. We as a business also submitted responses. So HMRC are now going to spend quite a while kind of chewing them over, having a look at what they're doing. And in terms of engagement on that, there hasn't really been anything since the consultation closed. I think it's, you know, a bit of quiet time whilst they think about what's been responded to in there, because I think there were quite a few areas in there where, you know, some consultations come out and it's a question of basically them saying, we're going to do this. With the MTD for CT consultation, it didn't feel like that. It felt like there were quite a few questions where they genuinely wanted the input of the industry to say, well, we're thinking about this and what do you think? Or, we could do that, but maybe this. And so there are quite a few areas where I think the feedback will be taken into account. And it was quite good having looked at probably half a dozen responses to the MTD for CT paper and tallied it up with our own. I think that the industry broadly were coming to reasonably similar conclusions, not identical. You wouldn't expect them to be identical, but certainly there are a few kind of key areas where I think the industry were kind of going with that, which is good to see. And then we're in terms of timelines, we're not really expecting any kind of legislation until next summer. So we've got a little bit of time to wait. And then voluntary from 24 and not mandatory before 2026. So, there is a lot of time, but there are quite a few changes that come with MTD for CT. So it's not one of those things I think is sensible to just ignore and go, oh, we'll do that in 2 years' time or 3 years' time. This is something to at least consider now and have on your radar. So what is being proposed? So basically, if you're subject to corporation tax today, unless you are a very large CRIPS payer, you will be in scope of MTD for CT. That's their kind of conjecture. And the timelines I've covered, and then the details effectively. There are a few different bits. Digital links and digital records in the same way of MTD for VAT are in scope, and I think digital links and even indeed digital records for CT is a more material change than it would be for VAT. At the moment, we see a lot of very manual processes taking place in corporation tax returns. So that is a big change when you think about the process and what that needs to look like. And the big change being really the kind of, I guess, the flagship change being that there is a quarterly submission as part of MTD for CT. So 28 key categories of income and expenditure being proposed, and that would be a quarterly submission 1 month after quarter end. So once you've done your quarter end, you'll then have to do your entity for CT submission, which is a big change, and then kind of an annual, the full computation, the annual computation doesn't go away, and there's almost kind of a true up. And some of these details that they haven't kind of finalised yet, but the kind of flagship change, as I said, being kind of a quarterly submission. The other big thing being a kind of a reduction to the timetable. At the moment, you've got 12 months to do your CT return. They were questioning whether that would they should bring that in line to the statutory account deadline and bring that back to 9 months again. Felt a bit like an open question. I presume the industry mostly said you can't do that. How can you possibly take away 3 months? But we'll see where they conclude on that and see what they do. In terms of the timetables, I think it's really important to bring it to light, because I think at the moment, if you look at kind of what you're doing for your prior year, this is kind of what you're doing present. You're doing a stat accounts, and this is for, say, a December year end. If you're a March year end, you can just change the dates by 3 months. So this is if you're a December year end, you know, you do your stat accounts in September, you do your CT return in December, and that kind of then rolls through. But what you'll find in the new world is that because you're doing these quarterly filings, there's a lot more kind of going on, and you've also got this bigger block of work when they move everything together. And I think that the section down here at the bottom probably really highlights it a little bit more. And this is one of the drivers, I think, behind MTD for CT. What they're saying is that, you know, if a business makes a profit in Q1 of a given year, then it's 18 months until HMRC find out about it. So they make the profit in Q1, it's 18 months later that they find out that that profit's actually been made, and therefore what that means for tax. And of course, under MTD for CT, if you make a profit in Q1, you're reporting on that a month later. So HMRC at least have a lot more sight of the figures. They've got a lot more sight of the data, what's going on, and therefore can kind of make judgments on it. So I think a big driver, and if you read the consultation, a lot of the kind of rhetoric was around that we want access to data. We don't necessarily think, quite a lot of taxpayers, particularly the ones doing very large quips. And the reason that the very large quips are out of scope are because they're already doing quarterly submissions. They've already got the process in place, and they've got things like SAO and other regimes that kind of mean that HMRC are more confident in their processes. Whereas I think what they're targeting is saying, look, there's a whole swathe of people, whole swathe of businesses that are not big enough to have SAO requirements and other things like this, but they are big enough to warrant a bit of attention. But we're just not getting the data, and we're not getting the information quick enough. So that's kind of what the change to the timetables looks like. And I think what's our kind of overall analysis? So it's, as I've just been saying, it's all about getting that data much sooner. It also means if they do bring together the statutory deadline and the CT deadline, it means that those two things must be much more tightly coupled, because at the moment we see a lot of people using their stats as their kind of source for their CT comp, because they've got 3 months to do it. That obviously wouldn't be the case. So it would require some changes to process, or changes to timelines, or changes to technology to kind of enable those things to happen. But it is no doubt there is an increase in workload, regardless of whether you do your tax in-house or you outsource it. There will be an absolute change there. We do still wait and see as to what actually will come down the line, but there's no doubt if you're doing a quarterly submission that there will be an increased amount of work for somebody to do somewhere. And as I said before, the digital records is big. They did also make some points about the quality of IXBRL. I think larger taxpayers, or indeed most of the mid-market, are quite good in terms of the quality of their IXBRL. But we know as we get lower down, I seem to remember a stat from last year where Companies House was saying something like 15% of all IXBRL filings just contain the 10 or 11 mandatory tags. They don't contain any other IXBRL data, which of course means that they're pretty much useless from an analysis point of view. So there were definitely some questions in the consultation from HMRC around, well, what can we do to improve the quality? Because at the moment, the data set that they're getting is very useful for the larger businesses, but it's not useful lower down the scale if people just aren't providing the information, because there's no punishment for filing poor quality IXBRL. So there's a few different bits. But yes, it's a fair way away, but in terms of direction of travel, there's quite a lot to think about. There's quite a lot to chew on. That we'll see kind of play out over the next couple of years. And one thing also that started to cross my mind, if you think this is just, I spent 5 minutes or so now talking about CT specifically, but if we think about how this plays out when we look to the wider tax function, you've now got this kind of situation, and I'll just kind of talk it through a little bit. So if you're a corporation tax manager and if you find the mistake for an invoice, you're preparing your return to get it done by the end of a month. So we're looking about our Q1 return here. We're in 2027, so we're a long way in the future, I grant you. But if you find that mistake, before you kind of finalize your MTD for CT return, you've kind of got this only 7-day window. So, and what I'm trying to say with this slide is that if you find that mistake, and as you kind of finalize your MTD return, you kind of then send it maybe to your head of tax or the FD or the CFO before you submit your MTD return on the 30th. But then it's important to make sure that that change is also reflected in VAT. And we do tend to see at the moment, these teams are quite siloed and the deadlines are quite separate. So there's very little interaction between, well, I've made a correction for CT or I've made a correction for VAT. How does that feed into the other return? Because the timings don't clash so much. I think if you look at the proposed timelines for MTD for CT and for VAT, you're going to have this 7-day window where if either the CT or the VAT person makes the change, that change is going to need to be reflected. Obviously, depending on the type of change, will need to be reflected in the other person's returns. And therefore, doing things in a siloed manner, particularly if you think about some businesses that have, hundreds of CT entities and tens or if not hundreds of VAT entities, this is quite a problem. This could become, particularly for larger or more complicated groups, to make these changes across, different silos of tax. It's going to be quite tricky. So it's definitely something to think about, and something that I think from a technology viewpoint is ripe for kind of automation, which kind of takes us onto our next section. So we're going to ask a quick poll question just based off of some of MTD for CT. So if it started tomorrow, if MTD for CT started tomorrow, how ready would you and your systems be? And it's a bit unfair because it's not starting tomorrow and we've got a while to prepare. Would you be not at all ready? Would you be, a little bit ready? You've got some bits in place, but you'd need a lot of work to get them together. Somewhat, you've got some kind of data automation flows, you're not a million miles away. You actually would be quite ready, or actually you're ready to go tomorrow. So answer now.
Great, and just while we're waiting for people to have a chance to vote in that poll, Russell, and to give you a chance to take a little break, just a reminder once again, you can send in questions to us, and we have had some of those coming in already, so that's great to see. And we will have some time at the end of Russell's presentation to discuss your questions. So if there's anything related to this topic that you'd like for us to discuss in that time, then just open up the Q&A window and we will take it from there, and we will answer as many of your questions as we can.
So nobody's fully ready. That doesn't surprise me at all. I'd be kind of slightly worried if anybody was. Half people, nearly 50% of people saying they're not at all ready, and indeed most people, even if they're not at all ready, they're only a little bit ready. That is kind of what I would expect. It's a little bit of a loaded, slightly unfair question, if I'm honest. But I think what we're trying to say here, and what the industry is saying is, look, it is quite a long way away, but there's quite a lot to do. So that does tie. It's actually quite encouraging that you've still got sort of 15% of people that are either somewhat or quite ready, and they're already starting to go on that journey. I suppose there are lots of good arguments outside of kind of purely compliance as to why doing some of these things, data automation makes a lot of sense. So it's good to see that some people are already moving down that agenda. So that's that one. So moving on to kind of what do we see in the what do we see as the future of the tax technology function, or the technology function, that we see? So I spend a lot of my time kind of stargazing a little bit around this, but what do we see in terms of that current state? So in a current state system, we tend to see a lot of this sort of process. We tend to see, and I think I've said the comment already, is that there's a lot of siloed processes that take place. So there's a lot of kind of extractions of data from ERPs, and then lots and lots of workbooks and Excel, other systems being involved. And again, it will depend on the type of business that you are, the type of organization, the type of transactions you have, the type of systems you have. But ultimately, there tends to be a lot of intermediary workings, and they tend to all be separate based on the requirements. So there's the separate process for CT provisioning, for VAT, for C/C, for transfer pricing, for stat accounts. All these things tend to have lots of different processes. And again, it will depend on the size of the tax function. There tends to be this kind of world of a preparer and a reviewer, somebody kind of responsible for getting the data, doing the preparation, and then passing it over to somebody for review. Again, it will depend on the size of the business and the tax function, but ultimately there tends to be that kind of mix of Excel and software, but they all tend to be quite siloed and different. And where do we kind of see the world going? And based on everything we've been talking about so far, kind of those drivers, where do we see the world going? So this is kind of, the way that I view it. I think certainly what will become much more prevalent is this kind of idea of tax data layer, the ability to kind of pull the data once from the system or systems that you have, but ultimately, having a single source of truth for tax. And we've done previous polls where asking people, what do they, what would they like a single source of truth for tax? And, unsurprisingly, lots of people would like that. But ultimately what we mean is that there is a tax kind of sensitized version of the numbers that you need. And back to the point I made around the kind of squashing of timetables between CT and VAT, this kind of talks to that and says, if you've got an invoice and you've got it in your tax data layer, if you make the change once, it naturally will flow through. So you've got this kind of tax data layer that feeds straight into kind of calculation layers. Calculation layers will always remain because, if you think about UK corporation tax, it's incredibly complicated, and that won't be changing anytime soon. And VAT in the UK is all quite specific as well, country by country. And then we're seeing a much broader kind of layer for kind of analytics and sign-off. Our kind of view and vision of the future is this kind of what we call a single digital compliance platform, which is ultimately, a single platform for your taxes. You pull the data once, you feed it into the right calculations, and then you sign it off once and get it sent out to the regulators. And what that also brings over the top is what we call kind of tax operations, which is the management of tax, controlling who can see what, controlling your appetites to risk. Again, depending on the size of the organization, things like SAO, it kind of will fall into that bucket. So there's lots going on there, and that's what we kind of believe. And talking into some of the areas in a bit more detail, what do we see in terms of management? So we see there's a lot more kind of, particularly for the larger organizations, but if you look at MTD for CT, they were sort of asking a few questions around, well, could we do a bit more? Could we kind of bring, other companies into some of the other regimes, because the SAO requirements, for example, are only the top sort of 2,000 firms by size. So a bit more kind of around governance, who can see what, and what do they have access to and what do they not have access to? That starts to become very important. That's a broader thing than just tax in terms of that place to audit and control. Risk in terms of making sure that you've got everything kind of documented. Another good example was that in the tax day papers that came out recently, there's a consultation around transfer pricing, talking around the increase of transfer pricing documentation and reporting around that. So again, having all of that kind of housed in one place, centrally accessible if needed. And then approvals, I think COVID was a big driver behind this. We saw pre-COVID that a lot of processes were paper-based. We still saw paper-based processes happening. I'm doing my VAT return, and what do I pass to my boss? My boss is the head of tax, and 5 days before the deadline, I need to give them a big lever arch file with lots of printouts, and they go through and they tick it and they sign it off. That obviously hasn't been able to happen over COVID, and it's actually driven all of those processes online. And we're now starting to see the prevalence of tools like DocuSign and Adobe Sign for kind of those approvals. So they kind of happen quite a lot in kind of a tax operation sense. Tax data, I've talked a little bit about this, and this is probably the area I get asked about most in my day job in terms of kind of how does this all work, but ultimately putting data out of the various source systems. So, if you're bigger, SAP and Oracle tend to be the big players up in that space. If you're a bit smaller, Xero, of course, is a massive tool of choice at the lower end of the market. Dynamics 365 is massively coming to the fore actually in the mid-market, but a lot of people moving on to cloud-based vendors, but getting that data out and transforming it and loading it into that kind of tax layer is something that we get a lot of questions about. How do we do that? What can we do? So there are some big areas in that kind of classic ETL. Well, tax calculations, this has been going on for a long time, calculations, outsourcing calculations to a software vendor to actually do the complex tax, the CT or the VAT. I think the key drivers behind using these, and the reason that they're becoming even more prevalent in things such as VAT, is that you get the maintenance and you get the updates kind of on an ongoing basis. VAT is changing a bit more than it used to, particularly with things like Brexit and VAT accounting post Brexit, VAT accounting, things like that. Maintenance and having somebody else make those changes and make sure that they're correct is kind of quite important. And of course, digital links from a VAT point of view really playing into this particular area. And then analytics and sign-off, we are starting to see these tools being used a bit more because of softwares like Power BI becoming more prevalent than they used to be, and Tableau, and of course the price coming down. Power BI licenses now compared to a few years ago are significantly cheaper, so people are employing them a lot more, but certainly being able to see a few different things. So I think one of the big areas we see people driving a lot of is, I've got 150 entities, how can I be sure that I'm getting my returns filed on time? Then looking into some of the data, looking into actual data figures, what I'm claiming R&D across a lot of my entities. How do I make sure that I'm maximizing those claims and I've not got kind of missed anything? And then sign off, of course, and I've come back to that point as well because it fits more into operations as well. But how can we make sure that we're signing off the right things? When are we signing them off? Are the people that are signing them off the right people to be doing that? So that's kind of a little bit around those sections, and I could speak for hours and days. It's my day job as to what these areas kind of entail, how they work. But certainly these are the kind of key things that we're seeing coming out of conversations and seeing coming out of software at the moment in terms of tax technology. And then just finally, a little bit around kind of how do you kind of assess where you are? And there's, this is absolutely not an exhaustive list. And we kind of, when we think about this internally, we think about, is it kind of faster, better, or smarter? Because they're three kind of key things. So faster, being able to, map data from your trial balance and general ledger automatically into software. That kind of thing happens quite regularly today. It happens in a lot of different software products. Some people are now starting to bring in kind of custom data checks or standard data checks, through to then kind of direct integration with the RPs, and then all the way up to kind of AI to flag and transactions and kind of automate mappings based on AI. So you'll see, some of the things down in this area are relatively straightforward compared to some of these things that we only see very, very few businesses doing. So it's almost, have a think about where are you in these kind of buckets. Do you have a very basic compliance workflow? Do you do any electronic sign-offs? Does your workflow maybe talk to other workflow systems or other systems? And then, do you have that kind of single pane of view of kind of tax risk? And then finally, on the smarter, do you have any reports? Are those reports customized to your business? Are you kind of using that information to actually then go back and optimize relief? So you're actually using the reporting to make business decisions? Because I think that's where this gets really interesting. It's not just about reporting on the figures, but it's about having the figures to actually make the changes. And then something that I would, crystal ball gazing, the kind of endpoint of all of this is, how do we actually then compare across industry? How do we compare with our peers? Do we know that we're overclaiming or underclaiming versus our peers? That's kind of the key nirvana for some of these things. And it's been quite interesting. We've had a few of these recently, people just asking us for our time. We've been doing kind of free 30-minute consultations to discuss kind of people's attitude to tax technology. And those have been some really interesting conversations, but certainly have a think about where you're kind of going, where your kind of, quick wins might be. Because in a lot of instances, we find people that are just, maybe aren't using a piece of technology that would make a lot of sense for them. So, doing some kind of quick wins and then being aware of what's coming down the line. Because, every single business will be somewhere on that kind of maturity model. So over to our final poll before we kind of round up and invite Q&As, because we are about 12 minutes or so from the end. So our third poll is, if you could buy any one piece of tax technology in the next 12 months, and it was entirely up to you, what would you buy? Would it be something to automate the flow of data into comp? So something to kind of do that data transformation piece? Would you buy something that can do analytics? So, looking at tax figures and getting into the data. Would it be something that would actually bring everything into one place and you can kind of, approve everything and see what's going on? Would you buy kind of a calculation tool, for example, a VAT engine to automate MTD for VAT? Or actually nothing, you don't want to buy any tax technology over the next 12 months. So over to you to answer.
And we are right by close to the questions part now. So thanks again for those who have already sent in questions. It's good to see those coming in. But just a reminder that if you want to have your questions answered, please do get them in. Cool.
So just over half of people, it's all about data flow. So I'm glad I said when I went to that slide, this is the area where most people are asking me about, because it chimes to the results. So that's quite nice. So it's software to automate the flow of data into computations, and it is a big area, probably, as I said, the biggest area where people are trying to work out what they can do and how that might work. And there are lots of different ways of doing it. Always happy to chat to people about what software exists in that space, what kind of things are coming out in that space, and what we kind of see as the future of that. Followed, quite far behind, I suppose, but by analytics, people looking at analytics, and then kind of those approvals and sign off. Good to see that only 2 people don't want to buy anything at all. So it's good to see that most people are wanting to buy things that, in absence of questions like budgets and times. I totally appreciate this is a bit of a crystal ball gazing activity. Okay, so that's the final poll. And just to round up, it's one slide and then we will jump straight into questions. So kind of just a bit of a recap. I sometimes can be accused of spending too much time kind of at 50,000 feet view, but change is happening. The world is changing, and it's changing pretty quickly. And we've seen a lot of movement in the last 12 months and even in the last 6 months or so in the tax and industry. Things do continue to change. So this is certainly kind of ramping up in terms of pace. VAT, I think a lot of people, they've lived through the MTD for VAT over the last couple of years from phase 1 and phase 2 of MTD for VAT. But I would say that is the start point. That is the first bit. This isn't, a requirement that's just being put in and then will be forgotten about. This is the start point of a much bigger digital transformation. And then going back to that kind of better, smarter, faster, technology absolutely allows you to kind of do things more efficiently, reduce errors. It allows you to kind of focus on the key numbers and spend more of your time kind of going back to that kind of idea of flipping the pyramid, spending less time doing the kind of transactional, low-level tasks, the boring tasks, and spending more of your time, actually providing insight and providing value. I think if you ask a lot of tax teams, if they were doing, what was it, 52% of top finance teams' time is spent on that kind of insight level, I would say that a lot of tax teams are well below the 52% in terms of providing that insight level. So, hopefully we'll see that continue to rise over the coming years, which will be great. And then ultimately, doing things faster. There are technologies out there now that can cut significant portions out of time taken to do processes. And it's not about, replacing humans or totally automating all of this with AI and robotics. That's not the case. What I think we're saying is that, there are lots of time sinks in the tax function, lots of things where it takes 3 days to do task X or 5 days to do task Y. And those tasks tend to be repetitive, tend to be very data driven, and therefore can be automated. So I think what we're trying to say is, look, that there are things that you can pick off now to do better, and then go from there. I appreciate I talk at a million miles an hour and probably thrown a lot of information at you in the last 50 or so minutes. So we'll now pause for breath and take a few questions. And thank you all very much for your time.